if I could share from my YouTube. Let me see if I get a notification.
All right, now we haven't been doing live videos on here. We've been doing a lot of posting of videos, but we want to test the waters out and see what the live videos can do for our channel in terms of us giving value to you. So if you're tuned in right now to this live video, you are tuned into the replay. And what we like to do on our live videos is tell you, if you're tuned into the replay, drop something in the comments. Since this is going to be 10 things that can help you take your credit score to the next level heading into 2021, I want you to put your credit score goal in the comments. So if that credit score goal is you just getting in the 700 club, drop it. 750, 800, 850. Put your credit score goal in the comments and don't be ashamed of it. And if your credit score is already in tip-top shape, meaning that it's already good, drop what your credit score is just so you can be a beacon of hope to those who are aspiring to reach the credit score that you have. But we're going to give you 10 things that can help you take your credit score to the next level. That said, you might want to go real quick, grab something to write down, some pen and pad handy. Yes, this will be recorded, but if you can appreciate your time, then it's better to take advantage of being on live. So get something you can write down with pen and pad, or write it in the comments and help somebody else out when they're watching it going forward. So that being said, we got 10 things that can help you take your credit score to the next level. And we're testing out this YouTube live to see if this is something we want to add to the arsenal of how we create content.
And we also want to say thank you for 2,000 subscribers.
Yeah, 2,000 and count. We're ready to take it up to the next level. So next goal is 10,000, I guess. So should I say 5,000? But yeah.
Yes. Tell all your family, tell all your friends about this channel where we give you constant financial literacy tools where you can take your finances, your credit, your investments, all of that, your legacy to the next level. Okay?
And if you have topics you would like for us to cover and discuss, then definitely drop it in the comments. And we'll definitely do what we can to deliver on whatever it is you're wanting to know from our perspective in a way that hopefully resonates with you, because we understand there's a lot of people out teaching and talking and things of that nature, but sometimes other people have the ability to break it down in a way that best fits you. So if you like our style, then definitely let us know what you would like us to talk about, and we'll go from there. So we won't keep you too long. We just want to give you 10 bullet points of things that you can do to take your credit to the next level, if that's something you want to do going into 2021.
All right, so let's get into it. Number 1 is piggyback on good credit history. Go ahead.
All right, piggybacking. Another way to do piggybacking in terms of your credit is being added as an authorized user. You see, when you're added as an authorized user, it can work out in your favor in more ways than one. Basically, all it is somebody adding you to their account as an authorized user, or you adding someone else to your account as an authorized user. The thing is, when somebody adds you to their account as an authorized user, you now inherit their credibility as it relates to that account. So if they have good payment history and credit utilization and credit history, then you get to inherit that, and that can help enhance your score. If they have bad payment history, credit utilization, and credit history, then it can hurt your score. So of course the goal is to find somebody who has good in all three of those areas, because it can impact your score for the better, and it kind of helps give you a shortcut in terms of quickly giving you some good payment history, utilization, and credit history all in one walk. We recommend doing somebody that's a family member, a friend, personally a family member, somebody that you trust and know that they're going to be on top of it in terms of making their payments on time, keeping their credit utilization low, as well as knowing that they might have some season and they've been using credit for some time. Now what that does is allow you to be able to inherit all of that good stuff, and it gets added to your credit report. Now, this is the power, because a lot of times people feel like, well, I got a family member who fits that category, but they'll never add me as an authorized user. This is the thing. If they add you to as an authorized user to their credit card, then they never have to issue you a card.
Yep.
So if they never have to issue you a card, then they feel as though their credit is safe and secure, because it's not like you can run up their credit card balance. You know what I mean? So they're more likely to want to do it. So if you do that one thing, it can help your score in more ways than one.
Yeah. And you guys, if you watch any of our previous videos where we've, talked about the 5 different credit score or factors that contribute to your credit score. Then you may be familiar with me saying this. My mom actually did this for me. When I was 17, 18 years old, she added me onto her account as an authorized user. She had amazing credit. And you better believe, now she actually gave me a card because she wanted to just kind of teach me that responsibility. And it had a low limit, maybe $300 to $500 on it. But you better believe every time it was time to make a payment, she was reminding me, hey, make your payment. It's important that you make your payment on time. Your minimum balance is this, da da da. It was even some times where she asked, girl, what are you spending money on? I see your balance is this. You want to get that back down, right? So she didn't know a lot about credit, but she knew enough to really get me started with credit. So of course, I'm appreciative for that. Okay, so you can definitely do that. That's a good teaching tool. And let me even say this before we move on. Did you know that if you have excellent credit, you can even add your children onto your account as an authorized user? We have 6-year-old twin boys. Me and Marcus both have excellent credit. We can literally add them onto our accounts right now. We can get one twin each and add them as authorized users, and we can start building their credit at 6 years old. Okay. Now, this does vary based on your credit card company. Some credit card companies and banks actually have an age requirement, others don't. So you may want to look into your company and just see if it is required. And of course, if you're going to put your baby on your card now, you got to make sure you're keeping your credit intact, okay? Because you don't want to affect the babies, okay?
That's right.
Number 2, keep old accounts active, okay? Now, at one point, you may have heard us say, close old accounts, but that was specific to if you are not disciplined, if you don't feel like you have self-control, if you pay off a card, you just feel like I gotta swipe, I gotta spend, right? Then hey, sometimes we gotta figure out what works best for you so that you don't dig yourself back into that hole. But to help your credit score, the length of how long you've had an account does matter. So I'll let you pick up on that one.
Absolutely. So you want to keep those accounts open because you don't want to strip yourself of the age that you've established. Yeah. Even if that account isn't the best, even if it's kind of report negative, the age of the credit helps, because what happens is sometimes people remove old accounts and it drops their score because they lose that 15% that comes from just having credit history. Not good credit history, just history at all, showing that you've started your credit journey. So keeping those old accounts open helps. Now, if it's an old account, then you got some other ones in the middle of your current accounts, and some of those are bad. Then you can remove some of those strategically. Yeah. But you definitely want to keep some of those old accounts open because it adds to your age, and that is a 15% portion that's affects your credit. We got 5 factors. Everything we say is going to tap into those 5 factors. We got payment history, credit utilization, credit history. We got new credit and credit mix. So all 5 of those factors are reflecting upon the list that we're about to give you. They either fall into one or multiple categories. So credit history is the 3rd factor. It affects your credit score by 15%.
Yeah, and I was just actually about to bring that up. You guys, keeping your old accounts open could also, if you were to close them, it could affect your credit utilization. Okay. Your credit utilization is basically, if you take all of your credit accounts, all of your debts, right? We want you, if you take the average of those, you need to be in the single digits. That's what we recommend. Now, other people say as long as it's under 30 or as long as it's under 10, we say single digits. And that is individually as well as collectively. Okay. So over all of your debts. Now, if you close an account, think about how that can affect your utilization. Okay. So if you are, disciplined, which I have faith in you. Okay. I believe you can be disciplined. You should definitely keep those old accounts open, even if you're just putting maybe 1 or 2 things on it per month and then making sure you're paying it before the due date. Okay. Number 3 is set up auto payments, automatic payments. Now, even though at one point I complained about this, it is most definitely a lifesaver for us because we have almost all of our bills on auto pay, just minus a couple of them. Okay. Everything being taken out automatically. This can cause you to avoid late fees, right? This can cause you to avoid those late, payments reflecting or missed payments reflecting your credit report, okay? Everything is on automatic draft and it drafts out a lot of times. Sometimes it even tries to take the payment a couple of days before the actual due date. This can help your credit score tremendously because you're building excellent payment history.
Yep. So that's it in a nutshell.
Yeah.
So auto pay kind of keeps the payment history on track automatically. As long as you're keeping the money in there, it automatically gives you some direction. Because a lot of times, as it relates to paying things, it can happen. It's not that people are, always pay things on time. It can happen just by accidentally forgetting. Things happen and I forgot to pay this. But one way to minimize that is just by having it set to auto pay. And that helps you because payment history is something they're cracking down on heavily. I did a video and I was talking about how paying certain bill types late affects your score and how much it can drop it in points on average if you're late. So if it's on auto pay, then you kind of alleviate the chances of you falling in that category. College student loans was high. It's like a late payment can drop your score 70 to 100 points if you're not careful. Credit cards is in there, and all of those things. So automatic payment helps you. So don't shy away from it because I promise you payment history is something they're cracking down on. And if you keep that intact, the most recent 2 years go a long way in terms of boosting your score. But if you don't, then it hurts you.
All right, number 4.
All right, what we got?
Number 4 is pay credit card bills more than once a month.
That's right.
Okay. Credit scores rely on debt utilization ratio. Okay. This ratio compares how much debt you have to the size of your credit limit. Oh, I see it coming. Oh, I see that.
Shout out. Yeah, we helped a lot of people adjust that W-4. So appreciate you for hopping on board. We help them better their credit. Now we're giving 10 credit tips. So share this with somebody you feel may benefit.
Absolutely.
But definitely that W-4 is a key piece to the puzzle, even as it relates to your credit. So shout out to you. Appreciate you.
Yes, congratulations on your job.
That's right.
Okay. All right. So number 4, you guys, is paying your credit card bills more than once a month. Okay. This can help you improve the score by decreasing the ratio. Of course, extra payments are going to lower your debt while increasing how much credit is available during the month. Okay. So you have to understand, this is just anything. You have a debt. If you can make an extra payment on your debt, that's going to help your credit score tremendously, especially if you can do that within the same month. Now, if you're sitting back and you're thinking, I really want to do this. I'm sick and tired of this credit card. I want to make additional payments. However, I'm living check to check. I can't really find the funds to do this. Then listen, you cannot be closed-minded to opportunities that can help you to bring in more money, okay? If this pandemic didn't teach you anything, it should have taught you cannot rely on just one stream of income. You need multiple streams of income. And now, you guys, there's the floodgates are open with opportunities for you to make money from your cell phones, opportunities for you to work from home. Don't be closed-minded to things that can help you to bring in more cash flow, okay? So that you can make those extra payments, because I guarantee you are going to feel absolutely amazing when you start really knocking out your credit card balance, okay? It's the best feeling. When you pay it off, it is the best feeling. But the key, especially with all of the interest that can be put on things like your credit card, you want to pay fast. You want to pay as much as possible, as many times as possible, right? You have to do it fast before that interest kicks in and just knocks you back, right? So again, don't be closed-minded. You need additional cash flow so that you can put extra payments onto your credit card bills.
Yep. The power of making 2 payments a month is just that, what she said. You see, when you make a payment, a portion of it goes towards principal, portion of it goes towards interest. Yep. If you're only making a minimum payment, then you're making the banks the most amount of money, because the bigger chunk is going to go to the banks in terms of interest, especially if it's already accumulating, not you already have a zero interest rate for a limited amount of time. But if it's already accumulating, then the interest is going to go to the banks every single payment you make. And if it's the minimum payment, the banks are going to make way more money than you realize, because a portion of it is going to principal, portion of it is going to interest, very little is going to principal. However, when you make that second payment, now you're tricking the banks and say, hey, I ain't falling for your plan. I'm not falling for the okie doke. You're not going to make a lot of money out for me. Let me pay some extra in the middle of the month, because now it positions that extra payment to go towards your principal. And that's what lowers your credit utilization. That's what lowers that overall balance that you have. So if you can make multiple payments, I highly recommend it, because more of your money will go towards the principal, which is the actual amount you want to go down. Less goes to interest, and it just positions you to heighten your score and pay it off in due time, like we said.
Yes, absolutely. So let's get into number five. Number five is ask for goodwill deletions. Okay. So let's get into this. All this basically means is, let's say, you've been with a company for a long time, your account has been in good standing. You're really a good customer, but you fell short a couple of months, or a pandemic happened, right? And it caused you to be late on your payments, or it caused you to miss a payment here and there. Well, guess what? It's as simple as just reaching out to the credit reporting agencies and just saying, look, I have amazing payment history. I just fell short, this month, or, I was late, or I missed the payment. Can this please be removed off of my report? Sometimes it's just a matter of asking. But again, you have to have previous good history. They're not going to just do this for anybody. It reminds me of when I was working my job, when I was working for AT&T. People used to call in all the time asking for their late fees to be waived, to get them removed. And there was things that we had to look at. How long have you been a customer with us? What is your payment history typically like? How many times have you been late? Are you calling in every single month trying to get late fees removed? If you're a brand new customer and you're calling in trying to get a late fee removed, that's a no. Okay, that's a negative, because you're a brand new customer. We haven't even built a relationship with you, right? So you have to keep that in mind. It works the exact same way with your credit. You can ask for those late payments or missed payment to be removed and not, affect your score. But you have to have something to show them that you've been a good, long-serving customer before we can get those things taken off.
And that pretty much is exactly what happened with one of my clients. I had a client, he had a great credit report and actually a great score. He was just trying to take it up another level. And when I was looking at his report, the only thing that was showing up to be red, meaning that it needed some correction, was a late payment. Well, the late payment affected all three bureaus. So it affected Equifax, Experian, TransUnion. So all across the board, that late payment affected it. I looked at the creditor, and the creditor was a bank that he had a couple of accounts with, and he had some great history. It's just this one thing they allowed to go ahead and get reported to the credit bureaus. So I was like, okay, instead of trying to delete that or stir up any, dust, we might as well just contact the creditors themselves. So we contacted the bank with a goodwill letter and just said, hey, this is the scenario. I love doing business with you all and look forward to a further relationship. Just letting them know we're not trying to go anywhere. We just need to clean this up on our report so it can reflect positively in terms of what we're wanting to do futuristically with our credit. So lo and behold, they got the letter, they removed those late payments, and it boosted his score 24 points across the board, 8 points per bureau, all because of that goodwill letter. So they can work. And there are other strategies if it doesn't work, but there's power in it as long as you got a great relationship with the creditor.
Yes, absolutely. Number 6.
Let's get it.
All right, number 6 is avoid pre-approval offers. You got to understand with these pre-approval offers that come in the mail, usually they require a credit check. And what some of them don't tell you is that some of them has already ran your credit. They did a soft pull on your credit to just kind of see where you are. That's where they come up with the numbers and what you are pre-approved for, right? You have to be very, very careful with that, because constantly running your credit report can do what? Lower your scores. Okay. Another thing about those pre-approvals, you have to be very, very careful with those, because they can be a little bit tricky. They may tell you, no interest for 12 months. But once that interest kick in, they might mess around and hit you with 33%, 40%. That's high. Okay, I'm exaggerating a little bit. But for real, you have to be really, really careful. One thing about us, when we really got our credit score like in the excellent status, those pre-approval letters come in the mail literally every other day. Every time we check the mail, there's a stack of them in there trying to get us to get a new card. No, we're good. Okay. We don't want those. You ain't going to get us. You ain't going to set us up. Okay. So please be careful and just avoid, if you can, the pre-approval offers.
Yes. And if you want to get a credit card, make sure it's something that you initiate, because it's power in credit cards. It's power in being able to use them and understand them if you know what you're doing. But if you don't, then you can get caught off guard and be in a credit card situation that you wasn't anticipating. And this is speaking from experience. So that being said, if you're applying for something, make sure you're intentional about it and you vetted the company or the entity and it fits what it is that you're seeking. But those pre-approval ones, and they may be some good ones, don't get me wrong, they may be some good ones, but at least you need to vet it if you plan on aiming in that direction. But take care of what you got for now, so you don't have to worry about trying to get something new just yet until you have an understanding of it.
It's also beneficial to avoid creating too many accounts. You don't want to have too many, especially if you're still just trying to kind of figure out the credit game, and if you're not disciplined. I cannot stress this enough, because if you mess around and you just start accepting these pre-approvals, now you have 7, 8, 9, 10 credit cards, and you're actually using all of them. Think about everything that's going into that. When you think about all of the 5 factors, you can easily mess up your utilization. You can mess up so many things pertaining to your credit score. You can mess up so many things pertaining to your credit score if you have too many accounts. Okay, so let's just take care of what you got first. Number 7. Okay, and this one may or may not be common sense to you, but we're going to throw it out there anyway. Avoid new utility accounts. Okay, whenever you have utilities like gas, electricity, or even things like your phone services, they require credit checks. And what can too many credit checks do? Them pulling your report? That's the microphone, guys. You're right. Lower your score. It can lower your score if you're having your things checked, your credit score checked or pulled too many times. So instead, a smarter thing is, if you're moving, let's say you bought a house or you're just switching locations and you're renting, just have your utilities transferred from one house to another, opposed to closing the account. Okay, things like, your cable, right? Things like your again, electricity, gas, those things can just be transferred from one house to another, because if you close the account in order to open up a new one, they have to pull your report. Okay,
yeah, that's it in a nutshell. Pretty simple and straight. Unless you're moving out of state, then of course it's a little different.
It's a little different, yeah.
But simple and plain.
Number 8. Listen, you might laugh at this one, but this is real. Okay, library fees. Do not forget about your library fees. Listen, y'all. And look, if you don't go to the library, this one don't apply to you. But some people still out here using the library, okay? Make sure you're returning your books. If you're checking stuff out, make sure you check them back in. Now, when I first heard of this, I was like, library fees? How can that hit your credit report? And Marcus said, well, when you apply for your library card, they do ask for like a utility bill or something like that. I'm like, oh, okay. Look, they might not ask you for your social, but trust and believe, if you're bringing a bill up in there, they're going to find you. Okay. And they got your location, they got your address, everything at that point. So it's not going to be too hard to figure that out, you guys. So these fees can actually hit your credit report. And because it's a negative thing, you didn't return that book, it can do what? It can drop your score. Okay? Keep that in mind.
And what you got to understand, credit is all about credibility. So now we live in an age where people who are entities that didn't used to use your credit now use your credit. It hasn't been always where jobs would look at your credit to determine if you get hired, if you're going to get that promotion. It hasn't been always that cell phone bills can reflect your credit. hasn't been always that utility bills can have an effect on your credit. So you want to make sure you're taking care of everything because you never know who's going to adopt that model and start using your credit score to determine what type of loan you qualify for, utility bill you qualify for. They might want to charge you a little more because of your credibility is out of whack due to a low credit score. So you want to treat every entity that you're involved with on a credible level so it can really be to your benefit if you do what you're supposed to do, but it can be to your detriment if you're not careful. So make sure you understand credibility is effective in all areas. And if it's hitting the library card, then you better believe you want to make sure you're taking care of everything else.
For real. Okay, what number are we on? Number 9.
Yep,
okay, so we're closing this thing on out. Number 9 is avoid online quote comparisons. And this one is real, y'all. Every time you turn around, somebody is saying, let me see if I can get your insurance lower.
Yep.
Let me see if I can get this bill lower. Let me see if I can get this lower, right? And if you're constantly looking, trying to get things lower, which we do advise for you, just as a part of budgeting, if you're getting your finances together, see what bills you can get lower. We do advise that. But on the flip side, if you're bettering your credit, you have to understand too many quotes. And too many quotes basically means your credit is being ran. So you got to understand anytime somebody's talking about getting you a better rate or comparing or just, trying to get you a better deal, that is code for I'm about to pull your credit. Right? So keep that in mind. You want to avoid your credit being pulled so many times. Okay. So this one is major. Mostly insurance and loans and things like that are where you're going to see people really trying to do those online quote comparisons.
Yep. So you got to know what you're getting yourself into, because I see it. If you sometimes just Google certain things, like, for example, if you're looking to refinance your home and you look that up, you better believe it's going to be some ads coming to show you how you might be able to get a better rate or how they can compare your rate to a group of other entities. Well, there's a good chance they're going to be running their score. And dealerships, car dealerships, they do this without even saying that they're doing this. But it's been people who I've restored their credit, and I see on the same day that this particular account got ran or inquiry, like 12 inquiries on the same day. And I can look and see, oh, this is the car company who ran it. And I know some people say, well, they say it don't hurt your credit if you have applied for it all in one whop, or it's not a hard thing. This is what you got to understand. That has been on some people's credit scores for credit reports for years. So it plays some role, some part. So if you can avoid it, then by all means do so. Plus, whenever I'm sending out letters, one of the clauses that I include is I want certain accounts that, like, I want non-credit holding inquiries to be removed. So if they ran your credit with credit acceptance and credit corporation and credit this, but Guatney or Chevrolet is the entity that actually gave you a loan, then what in the world are these other entities still doing on my report? I don't have a loan with them. So you want to get some of that stuff cleaned up. But credit cards are notorious. I mean, credit dealerships are notorious for running and doing all these comparisons across the board. So if you can avoid it. Or if you need assistance cleaning it up, let us know.
And you got to understand, sometimes, people will tell you anything to get that sale.
That's right.
To get that purchase, something like a car, they'll tell you anything, so keep that in mind. Yep. Number 10, okay, this is the last one. And this one is major, guys. Establish long-term credit, okay? You need to establish some long-term relationships here, you guys. Quit thinking so short-term. Quit hopping around and being so antsy and so anxious. Sometimes I always compare this one to like being in business, because wealthy people and wealthy entrepreneurs will tell you, in order for you to really be successful in a business, you need to stick around. Give it the first 5 years, not 30 days, not 60 days. Some people will start a business or join a business opportunity and they are out of there in 60 days. And it's like, do you even really know what was offered? You can't do that. And the credit it works the same way. They want to see that you can have a long-term, good standing relationship. It shows that you're responsible. It shows that they can trust you, that they can loan you money. and trust that you're going to pay it back and you're going to be on time and you're going to be just a good citizen. Okay. It's just to sum it all up. They want to see that. And your credit report is going to show everything. Are you moving from house to house to house every 6 to 12 months? You moving again, right? Are your accounts in good standing? They're looking at everything. So make sure you're at least establishing some long-term relationships, which means long-term credit.
Yep, credit history, 15% of your score. Like we said, everything we touched on hit on one of the 5 factors of your credit report.
Right.
So your credit reflecting your credibility, you want to make sure you're credible in all areas. Because if you were about to talk to a significant other or potential significant other, then you don't want somebody who's been bouncing around and been, with every, I hate to say this, but Tom, Dick, and Harry, in order to, you're going to want somebody who, got some credibility. Yeah. That's how you gauge in relationships. And that's how business entities view you in terms of how they want to determine whether or not to allow you to get access to this loan, this credit card, if they want to overcharge you because you have poor credibility. So it's all applicable. So how you do anything is how you do everything. So make sure that you're doing certain things in all areas so that it rolls over into your credibility in terms of your credit as well. But like I said, all of the things that we discussed covered over those 5 factors. I'll go over them briefly and then we'll wrap up. So we got 5 factors as it relates to credit. If you know all of these factors, then you know what to do in order to make sure you're intact in our areas. Or if you need assistance or you want access to our free masterclass, credit masterclass, then it should be a link below that allows you to get that. But the 5 factors are: 1, payment history; 2, credit utilization; 3, credit history; 4, you got credit mix; and then 5, you got new credit. Payment history affects your score by 35%. 35% of your score is contingent upon how well you pay things on time, over time, all the time. And the most recent ones have the biggest effect. That's 35% of your score. The second one, credit utilization, is 30% of your score, but it's the one you have the most control over. You are the one that's in control of keeping a low credit card balance. I usually say under 10%. So if you got $1,000 balance, then knock a zero off and your new credit limit is $100. You want to stay under that. If you have a $10,000 balance, knock a zero off. Your new credit limit is $1,000. You want to try to stay under that, and that helps you, or pay it off in full every month. But that's 30% of your score. 3 being credit history. Credit history is 15% of your score, and that's just the age of your credit. The sooner you start your credit journey, the better. So if you got 5 years of credit history, 10 years of credit history, it looks good because they know that you're not new to credit. You're not wet behind the ears, as they say, in terms of using your credit. So you want to have some credit history established, which is why it's important, if you can, to get your kids added as an authorized user, because it gives them history ahead of the game, or at least keep your old accounts open. So that way you're not, running risk of not having good credit history. 4 is credit mix. And that's just having a mixture of credit cards, credit loans. That mixture lets them know that you're good in multiple areas of utilizing your credit. And then the other one is new credit. They want to know how recent have you been good with using your credit. Yeah, you might have had some good history back in the day, but do you still got it? Are you still able to pay things on time? But on the flip side, it can be beneficial because, yeah, you might have messed up back in the day, but if you cleaned yourself up and you know how to use your credit properly now, those most recent years and then new credit can benefit you towards taking your credit score to the next level. So those are the 5 factors. Those last 2 factors affect your score by 10%. I don't think I said that. So you got 35%, 30%, 15, 10, 10. All going into affecting your credit. Hopefully these 10 ways of enhancing your credit going into 2021 have done you some justice. Share this video with somebody you feel may benefit. Let us know if you got any other live videos you want us to do, topics you want us to cover. Leave them in the comments just to see if we want to start using this strategy on YouTube so we can take our subscribers from 2,000 to 10,000 and beyond.
Yes, and you guys, if you want an even more in-depth breakdown of the 5 factors, we do have previous videos already on this channel. We have a free credit class where we broke down all 5 factors. We even did a 5-day credit challenge on Facebook where we went in for 5 days straight, just really breaking down all 5 of the factors. So we just gave you, 10 strategies for bettering your credit. These aren't the only 10. There's a lot that goes into your credit score. And so we're more than happy to help you. Feel free to ask us any questions. You can send us a private message. If you want your credit done for you, if you want to learn how to do your credit yourself, we are more than happy to help. Or even if you just want to take your overall finances, your legacy to the next level. Well, some of y'all know that we have been empowering families for over 6 years now, just helping them to just really increase their cash flow, bring in more money, fix their credit, and all of that good stuff. Pay off debt, invest. So we're here for you. Make sure you spread the word. Share this channel with your family, your friends. There's plenty of free content. Woo! Free financial content on this page. So, you guys, thanks again for hopping on.
That's all we got, Mr. and Mrs. Smith. Signing out.